This is Crypto Update Chris, and here's your daily update. Today, let's dive into two key developments in the Bitcoin market that highlight the contrasting strategies and emotions driving recent market activity. First, we're seeing a sharp decline in Bitcoin's price, slipping below the $93,000 mark, which has led to a wave of panic selling among investors who bought in at higher levels. These sellers are primarily short-term holders, those who have acquired Bitcoin in the last 155 days. This group is offloading their holdings at a loss, exacerbating the downward pressure on Bitcoin's price. It's a classic case of fear taking over when the market shifts, and unfortunately, it's not an unusual phenomenon for newer or short-term investors. When prices start to dip, some people panic, fearing further losses, and rush to sell, often locking in a negative outcome. On the other side of the spectrum, we have long-term Bitcoin holders taking a very different approach. Instead of reacting to the price dip with panic, these investors have been strategically capitalizing on the recent market surge prior to the decline. Collectively, they've locked in over $2 billion in profits. This behavior underscores the advantages of patience and long-term thinking in a volatile market. These holders have likely accumulated Bitcoin at much lower price points and have been waiting for the right opportunity to cash out. By doing so, they're managing to extract value from the earlier upward price trend rather than reacting to short-term fluctuations. What's fascinating here is the clear divergence between these two groups of investors. Short-term holders seem to be more reactive, often guided by market noise and immediate price movements. Long-term holders, on the other hand, show a more measured approach, leveraging their understanding of Bitcoin's historic cycles and focusing on the bigger picture. It's a reminder that time in the market often beats timing the market, particularly in such a volatile space. Another point worth noting is the sheer scale of these shifts. With over $2 billion in realized profits, long-term holders are demonstrating the immense potential for wealth generation in cryptocurrency when managed with a disciplined strategy. Meanwhile, the losses suffered by short-term holders illustrate the risks of entering a market without a clear plan or the ability to weather short-term storms. The recent market activity also highlights the broader emotional landscape of crypto investing. Fear and greed remain powerful drivers. When prices fall, the fear of further losses can lead to panic selling, as we've seen. On the flip side, the greed to capture gains during a rally can lead to profitable decisions for those who've prepared for it. This emotional cycle is part of what makes cryptocurrency markets so volatile, but also so dynamic. It's crucial to understand that none of this is unusual for Bitcoin or cryptocurrency in general. Volatility is part of the DNA of this market. Price swings, often amplified by macroeconomic factors, can create significant opportunities, but also pose substantial risks. For new investors, these shifts can feel overwhelming. However, for those with experience and a long-term mindset, the volatility can be managed and even leveraged to their advantage. This conversation should serve as a reminder of the importance of having a clear investment strategy. Understanding your risk tolerance, maintaining a diversified portfolio, and staying informed about market trends can make all the difference. And as always, nothing we discuss here should be considered financial advice. This is purely for informational purposes. Whether you're a short-term trader or a long-term holder, staying grounded and making informed decisions is key to navigating this ever-evolving market.